A few months back, Zomato, one of our favorite stock, had a prolific entry through its IPO. Its stock is listed at an IPO premium of 66%. After issuance of the stock at 76 rupees, it rocketed to rupees 169, creating an all-time high. Unfortunately for the company, the stock today trades at a price of 86 rupees, just 10 more than its issue price. So did Zomato have a basis for its increase? Since the disruption of COVID-19, the Indian stock showed a bullish recovery and reached an all-time high level. Lots of new investors were attracted to this bullish trend, and this increased the overall volume and flow of credit in the market. With new tech in the trend means good prospects, created a buzz, and everybody was eager to participate in this IPO. With support from investors, the company's valuation jumped from rupees 50,000 crore to rupees 100,000 crore. The company's valuation reached 1.33 lakh crores, and now with the current correction it fell to 61,401 crore. A few of the reasons for this fall could be the liquidity flow in the market being favorable for these new unicorn businesses flourished over the last year. But since January, there's been a lot of news around quantitative restrictions which has been impacting the flow of liquidity in the market, further impacting these new age technological businesses. A second reason could be the quantitative restriction by the US Fed that has led to abrupt money outflow and correction of markets around the world. Another reason could be that with the negative sentiment in the market, new comparatively small companies have been severely impacted in comparison to already established ones. To add to this, they posted a continuous loss during the third quarter results. The company posted a net loss of 63 crores. Tech companies are widely recognized for their nature of failing drastically as they are valued high during their high growth prospects. But these take a massive hit during bear markets as the valuation looks overvalued and the correction deepens. Further, the exit of private equity funds was the latest blow the stock suffered. This might be another reason as to why it fell. So, is Zomato a long-term bet? Well, as per market gurus, Zomato is a very strategic and long-term approach to building a business. So judging Zomato based on its current correction would be unfair. Investors should focus on the value investing approach and keep patience during these times. So have you invested in Zomato? Do let us know below in the comment section. Happy investing.